All right, so buckle up, because today we are diving deep into the world of interest rates,
Oh, yeah.
specifically the Federal Reserve, everyone's favorite central bank.
Right.
They've got this big decision coming up,
Yeah.
to cut or not to cut,
The question is by how much, right?
and if so, how much, right?
Exactly.
You guys have sent us a ton of articles on this, so clearly it's the talk of the town.
Mhm.
We're going to help you figure out not just what might happen,
Yeah.
but like what does it all mean for you?
What does it mean for your everyday life? Yeah.
Exactly.
What's really fascinating about this particular decision is, the Fed is in a tough spot.
Okay.
They are looking at all the same data that we are,
Right.
but they're the ones that have to make this decision that impacts millions of people.
Right.
It's not just numbers on a spreadsheet. This is real life.
No, absolutely not.
Yeah.
Okay, so let's set the stage here a little bit. A rate cut is potentially happening.
Yeah.
Most of these articles, I think, agree on that. But the big question is it going to be, a quarter point kind of like your standard Fed, like
Yeah.
we're just going to tweak it a little
Oh, a
bit?
little nudge?
Or are they going to go big,
Right.
like a half-point cut?
Right.
What makes this time so, on the edge of our seats?
Well, you hit the nail on the head. It's this conflicting economic data,
Yeah.
right? On one hand, inflation is near that 2.5% target,
Okay.
which is a win.
Okay.
That gives them a little bit of breathing room. And typically, a rate cut is meant to make borrowing cheaper.
Right.
So that's for businesses taking out loans. It's for you going to buy a car.
Right.
Yeah.
So it's almost like you're loosening the reins a little bit on the economy.
Yeah.
It's like a little, hey, go ahead, spend some money.
It's encouragement. It's like a little economic stimulus package in a way, or at least that's the hope.
Yeah.
But you knew there was a but coming, right?
And there's always the but.
There's always a but. We're seeing some things, unemployment's ticking up.
Okay.
A couple of sectors are slowing down their hiring. It's like mixed signals, you know?
Okay. So it's almost like everyone's in this holding pattern, like, what's going to happen? I don't know if I should spend. I don't know if I should save.
Right.
What about consumer spending? Because everyone's got to go to Target. Right.
You're right. And that's the thing that makes this so tricky, right? Is that consumer spending, which is a huge part of our economy, is still strong. So is that a sign that things are actually good?
Yeah.
Or are people about to, pull back?
Right.
That's the million-dollar question
Yeah, that's a good question.
that the Fed has to try to figure out.
That's what they get paid the big bucks for, right?
I guess so, yeah. That's above my pay grade.
So we've got all this data, right?
Yeah.
Some good, some maybe not so good. And it seems like everyone's kind of holding their breath, waiting to see what the Fed's going to do.
Yeah, the big deal.
So let's talk about the folks who are saying the Fed should go big, right? Like, really make a statement with a half-point cut. Why are they saying, don't be shy, Fed, go for it?
Well, I think for them, it's about sending a message, right? Like, we've got your back. It's like taking out an insurance policy against a potential recession.
I see. So less about reacting to what's happening right now and more about trying to, steer the ship in the right direction before it's too late.
Exactly. And they're looking at history, too, Past recessions, sometimes those bigger cuts help prevent things from getting really bad.
So there's some time, let's look back to see how to move forward happening.
Yeah, exactly. And it's not just history, though. You look at the markets, right? A lot of folks are betting on a big cut. Now, whether that's smart or just following the crowd, who knows? But it definitely shows where people are putting their money.
Yeah, it's like economic poker. Everybody's watching everybody else's hands. Okay, so that's the go big camp. What about the other side? What are the worries about a rate cut that's too much too fast?
The big one. You don't want to scare the markets, right? Because if you do something really dramatic, people might think, oh, no, things are worse than we thought.
Right, it's like shouting fire in a crowded theater.
Exactly. Even if there isn't fire, everyone panics, and then you've got a real problem. Then, of course, there's inflation. It's calmed down a bit, but if you cut rates too much, it might come roaring back.
And that's not good for anyone, especially everyday folks just trying to make ends meet.
Right. It's about finding that balance,
Right.
stimulating the economy without letting inflation get out of control.
Easier said than done, I'm sure. But we've also got to consider how the Fed usually does things, right?
Yeah.
Like, what's their track record?
Absolutely. They tend to be pretty cautious, make small adjustments, see what happens. So a smaller cut would be more their style, historically speaking.
Okay, so two schools of thought, both with valid points. It's like rip off the Band-Aid or slowly carefully peel it off.
It's interesting, right? Because we talk about what's happening here, but it's not like the U.S. economy exists in a bubble.
Right, yeah, it's a global economy.
Exactly. So what happens if we're hitting the brakes, but everyone else is still, like, foot on the gas?
It's a good question. You know, it's something that's easy to forget. It's not just about what's happening here in the U.S. The Fed has to think about, like, what's going on everywhere else.
Oh.
And that's not always easy to predict, right?
Right.
What if they do a big cut, try to boost things here, and then suddenly, Europe goes into a recession, or there's like a big political crisis somewhere that affects, I don't know, manufacturing. Suddenly that rate cut doesn't look so smart.
Yeah, because confidence can change like that, and then that impacts everything. Exactly, it's all connected. So it's a balancing act, thinking about the U.S., but also keeping an eye on the rest of the world, which is, probably keeping those Fed folks up at night.
Yeah. So we've covered a lot. We've got data coming out of our ears. We've got history. We've got the whole world stage. But let's bring this back to our listeners. What does it all actually mean for them? And what should they be watching out for as we go forward?
Okay, so basically understanding all this, it gives you a little bit of an edge. Like if you're thinking about buying a house or a car,
Okay.
let's say the Fed goes big with the rate cut, right? Loans could get cheaper, maybe.
Okay.
On the other hand, if you're relying on interest from your savings, a rate cut, that might mean a little less coming in. It's not all sunshine and roses.
So it's like the Fed makes a move, and then there are these ripples that go out, and it affects, like, mortgages and the stock market and all kinds of things.
Exactly. So even if you're not like an economics whiz, it's good to kind of, keep your ears open and see what's happening. Knowledge is power, right?
Absolutely. Especially when it comes to your money.
Right.
And that is a wrap on interest rates, at least for now.
For now.
But this is something we'll definitely keep coming back to.
Right.
That's right. Because like we said, the Fed's decision, it's going to have these ripple effects.
Oh, yeah, for sure.
But here's something to think about. If you were the Fed, right? If you were the one calling the shots, what would you do?
Yeah, that's a good one.
What feels riskier? Going big now, or maybe things getting worse later on? It's a tough call, really.
Tough. Yeah.
There's no easy answer.
Yeah.
But it's something we all get to find out together,
Okay.
right? And until next time, keep on learning, keep on asking questions, and we will see you on our next Deep Dive.